Hey traders, welcome back to another video. We're first taking a look at the S&P 500. We will shift our gears into the world of crypto soon after, but we want to start off looking at more the traditional markets because if there is a lot of fear, uncertainty, worry in the traditional markets, looking at the S&P, there's probably going to be some sort of bearish action within the realm of crypto. We've seen in the past when there is significant RVol and volatility to the downside for the traditional markets, we usually see crypto stagnate or usually move to the downside. So we have to keep that in mind. So right now, let's just take a quick look of our S&P 500 here. So we saw a series of higher highs and lower lows. This created an expanding pattern, which wasn't absolutely beautiful. We don't really like to see it. That could have been a little bit better of a draw. Let's go like that's a little bit better. So then when we have our resistance as well as our support expanding, it's not great because we like to see contractions, but that was our structure where we saw a key level of resistance breach and we created a previous resistance turning into a new level of support, and we had our nice move to the upside here. And we see a tremendous amount of volume coming in relative to the previous many years like we saw here. So we are looking at a potential continuation until we see our expansion phase before the breakout, which is this zone right here. This is where the COVID crash occurred. We're taking that distance and that geometry in terms of the size, and then looking at that for that to be a potential first level of take profit or a target. And we see that around 4,800. That's where our current target is on a larger time frame for the S&P 500. Looking at the 2-day chart, we will get into a little bit more specifics as to how it actually came into the all-time high of 4,200, which we called back when we initially broke our expanding pattern in March of 2021. So we'll keep in mind that our overall bias is bullish for now. In the short term, it does look a little bit more bearish. We could take a little bit of a dive, but in the larger time frames, let's looking at the daily and up, we are looking at the S&P and the traditional markets in a bullish state. So we are going to be looking at a smaller time frame here. Let's jump into a 12-hour time frame and break what we've been kind of seeing since late 2020 and on for the S&P here. So since the breakout, we have been creating an expanding formation like we did see within the multi-year cycle for this larger one, which isn't ideal. I really like seeing contractions, but we saw a nice little ascending zone which did dip to the downside, kind of similar to what we're seeing right now for BTC. We had a nice ascending wedge, potential melt up to the upside, but we did fall down. So now we are looking to enter in the bottom before our next leg up. So then looping back into the S&P, we had that nice recovery, and this is that expanding pattern that we were calling for 4,200, where we saw a series of lower highs and lower lows. Although it was expanding, we like contractions similar to what we saw within this wedge or what we're currently seeing right now. Obviously, if you have watched previous videos, you know that we do love contractions in volatility, but inevitably it did break to the upside. We were able to kind of have a resistance just above this zone, have a great pullback, creating a great bull flag, and then we had a nice contraction where we saw a series of higher lows. Let's zoom in. Right here, we see a series of higher lows, contracting the price within a key level of resistance. And that was your key indicator that when it does break this massive resistance level, we probably should get a move to the upside here, looking at how well it held that higher low from this high, or from this low, sorry. And then we got that strong push to the upside, which kind of coincided well with the BTC and cryptocurrency push we've been having. Did have a little bit of a dip. This was during the BTC meltdown, and a lot of cryptos lost a lot of their market cap. We did see a little bit of a dip, but the S&P held their value and held their ground and held the support very well compared to the overall cryptocurrency market. The only thing I'm slightly worried about right now is we are creating a potential ascending wedge here. If it does just touch that top there, and it starts breaking this key level of support around 4180. We could see a little bit of a move down here to our nearby support of around 4100. If it does get a lot more bearish, we would be looking at the next key level of support at around like 3975, where you get an ascending zone of support and a horizontal level of resistance, which should be acting as a zone of confluence for the buyers. So those are my next key levels. If we take a look at the 2-day or like the weekly, we can see there is lots of wicks. If we take that out, and if we draw a nice quick picture, we can see there is a lot of wicks below this major level of support right here. So there's a ton of buyers, and that's why I'm expecting in terms of the long-term price action. And if you jump in on the weekly, this is the weekly chart compared to things like the 4-hour, 12-hour, even the daily, you see dips to the downside. But when you're looking at large time frames, you see the price get picked right back up on multiple candles, and then you see big hammers. That is a great indication of buyers holding the price and potential buyers continuing the overall momentum, because since our breakout kind of around November of 2020, very similar to the breakout that we had in BTC, overall cryptocurrency market. That was fall of 2020, September, October. We were in a, or I guess August, September, we were in a very tight contraction consolidation just above or just holding below a major level of resistance for the triangle in BTC, and these two formations broke out in very similar times, not exactly, but pretty similar. And in my opinion, they are correlated because there is, with the retail trader being able to really utilize any platform to buy S&Ps, even by fractional shares, I think that there's a lot of more correlation than what many people think, or even what the numbers think in terms of the S&P fear and the cryptocurrency market. So now we're going to jump into gold and silver really quickly, and then jump into the cryptocurrency market like we have been talking about. Gold, in my opinion, has broken out of this nice flag. Looking at the monthly, we see it is a pullback to validate a major level of support back in 2011. And then this is a major pullback that we're seeing on the monthly, or sorry, the 3-month. We see it even more clear, which is great. So in my opinion, this is a great continuation pattern to the upside. We have broken it, and I think the bulls are coming into the metals, or the precious metals here. All metals, really, if you're looking at like copper or palladium, platinum, all of them are doing really well, but we mainly cover gold and silver. So when we do overlay our drawings, we see a great bull flag, series of lower lows, series of lower highs, and a nice structured, well-respected formation. We see our nice bullish indication with relative volume increasing. You see a solid break, and on a smaller time frame, a retest of a major level of sensitivity of previous support as well as resistance. So great to see, and now we're getting that continuational push to the upside. And when we're looking at silver, it has yet to break, and that's usually because gold is the front runner or the first to move. It's sort of like Bitcoin, where Bitcoin usually runs up first. It got a lot of its dominance, or a decent amount of its dominance, back early on when it was taking charge, and then when the real bull run came, and then the altcoins started to absolutely rally, the meme coins, the hype coins, BTC's dominance took a huge plunge to the downside. But when we're going to see that next rally for the second half of the year, I think that Bitcoin's going to take back a lot of its dominance, and then in the second, or I guess last quarter, second half of the second quarter, that is when BTC dominance is going to plummet yet again, because altcoins are going to absolutely moon. So now onto silver. We see that it is pressing up against it. We'll look at a smaller time frame to see the nice ascending support zone connecting the higher lows. We saw a symmetrical triangle create a squeeze when it had a massive move to the downside. This was the September 2020 massive plunge, and then the COVID crash was right here around March, February of 2020. And then we see it did recover barely, did create a lower low than we saw right here, which was a little bit worrying, but we did inevitably actually have a candle closure higher than this low, which is great to see on the weekly chart. And then we're seeing a nice recovery, and when we are looking at a daily, we see a series of higher lows pushing and pressuring the price towards that $29 range, which is a major level of resistance for silver. We see a nice bottoming formation, kind of like we saw on gold on a very large time frame, where we saw that massive parabolic push all the way to like 1900, and then we saw that 5-6 year bear market for gold. This has been a very short bear market, but this is the similar sort of structure where you get that strong push up, you get a series of lower lows, although not significant. You consolidate, you base, bottom, and then you get a series of higher lows holding a major level of resistance or a cap on the lid. And then when you do get that break of the cap, it usually has a very strong breakout to the upside, and that's what we're expecting for silver. $35, $36 is going to be the next major level of resistance, so keep an eye out for that. I do think we'll be hitting it a lot quicker than many people anticipate, so keep your eyes out on silver. So now we're going to go into the cryptocurrency market. We'll actually just stick to the S&P right here. And then we do have drawings for that, which we've already talked about, but we're not going to incorporate those. So let's first look at the possible potential situation that we will be having here for BTC. If this does hold, we'll look at the smaller time frames to see what we're able to identify for a potential strong reversal formation. Let's change the volume because this relative volume and volume for the basically every exchange that retail traders use combined into one single indicator is right here. And if you don't know what it is our great volume indicator on TradingView. Our account is Performante Trading, and our unbelievably gifted, talented members and Performante team crew were able to help that out. So great appreciation and shout out to them. Now moving on to the price action. The only thing that kind of concerns me for a potential bearish push, and this is the same thing with the S&P 500. Let's draw that again. So if the S&P 500 is, let's say that's like the half line, the S&P 500 is trading pretty high against the resistance. If it starts to plummet towards the level of support, that would be a very significant fall for the S&P. And if the S&P is falling to that extent, I think the cryptocurrency market will as well. And if that is the case, this is the formation that a lot of people are looking at right now, is the head and shoulders formation, where if the 48K level of resistance holds, this would be a pretty awful situation for BTC, because that would be quite a ways down from the neckline to the head, which would be from here all the way to here. And then you're looking at like potentially even getting a retest below the all-time high of 20K, which is like right around there, 19.9, 19.8. Some exchanges didn't go to 20K, but a lot of people are looking at 22K. But if the S&P is moving to the downside significantly, I think BTC will be as well, and that could be a reversal formation for BTC, which wouldn't be ideal. I don't think it'll happen, but it is a situation where I do not want 30K to drop down. I'm not going to short. I think it's a bull run, but that would be a situation where I would have to really look at the price action, and my thoughts on the bull run may change. But at this current state of the price action of the overall market, it does look like this is holding, and I'll give you valid reasons why. Not just in terms of previous times, we can see previous bull runs. They're cyclical, they move in cycles, and we are still very early in our cycle in terms of what happened in the past. And when we're looking at the price action, we still see a higher low. This is the first major pullback that we've seen in the bull market. This is a previous major level of support, but we were just touching the 30K range, and we see wicks below the 30K range in the previous low. And this was our first major contraction, and then we get there, they get the very explosive push to the upside there. And then what we're seeing again right now, look how many wicks are here. We see tons of wicks to the downside right here. Big wick right here. Yes, you get a massive wick to the upside here. You get a pullback, a little bit of, I would say, not market manipulation, but that definitely would be a little bit worrying to some degree if you're only relying on that. But you see, on average, a lot more wicks to the downside to the upside. And what we see right here is very similar. Wicks to the downside, meaning price moves all the way down here, but within that same 2-day time frame, the bulls were able to bring it right back up very close to the open of the candle, indicating buy pressure coming in and buying up the low, pushing it right back up because they know that it's going to continue on, or they have high conviction that it is going to continue. And that I am on that boat as well. So this, in my opinion, is the first major higher low within this structure that we see right here. This is the resistance. This is the ascending level of support. Lots of wicks, lots of wicks. This is the first major wave. If you do not know, this is how we trade symmetrical triangles. We usually have a first wave, and then we usually have a second wave, and the third wave can be very small, or it could come down all the way to the higher level of support right there. Sometimes it could be an ascending zone like so it could create like a tiny symmetrical triangle within the larger symmetrical triangle. But either way, you're looking for a 1, 2, and then a 3. So this is number 1. In my view, this is number 1. We are currently at the bottom of number 1. We are potentially going into a number 2 wave, which would be going something like this. That would be a number 2. And then number 3 could be very, very short. It could be like that, and then a massive bullish push. Doesn't even need to be a massive wave, but it just needs to be a resistance touch and then a pullback, validating that third wave completion. Doesn't have to go all the way down low here. Could just be a massive rally to the upside where you get that slight pullback, and that could be your third wave. Just because it's so bullish, you're not going to get that pullback. Bulls have been very, very patient all the way through, from let's say late mid-May all the way until the next potential breakout, which could be in mid-July. We could be waiting another little while here, but this is the time to accumulate. I don't think that the bull run is over. Looking at the price action, looking at the altcoins that we will look at a little bit later in this video, in my opinion, we are still very well ahead in this BTC and cryptocurrency bull run. Just takes a little bit of patience. We saw back in 2017 that there was some corrections, not as significant as this, but there is a point I think that is made in terms of the new traders having so much leverage. If you get liquidations, people are able to 100x very easily on any exchange, really. So if you're able to do that, there's going to be a lot more liquidations when there is significant moves that are greater than 50%. Because even if you're only leveraging twice, you're going to get absolutely wrecked if you bought any time in the spring of 2021. So at the end of the day, that is something that you do have to consider if you are using leverage. So that's my take on BTC. Potential symmetrical triangle. If it does break 30K, I'd be a little bit worried because we could be pulling back pretty aggressively, at least to the 20K range, the previous all-time high, maybe even dipping a little bit below. But my overall perspective is always going to be long bias when we are basically mid-breakout of the largest symmetrical triangle that Bitcoin has ever created in its history. So that's going to be my take on BTC. Let's quickly look at the Btc Dominance here. Great consolidation. Like we saw in 2017, it has consolidations, but the overall direction is to the downside, indicating that altcoins are increasing and appreciating and taking market share at a greater rate than Bitcoin in terms of the capital inflows, which makes sense. There's more hype. Bitcoin's like the blue chip of the cryptocurrency market. I would definitely say you're not going to get unbelievable appreciation compared to some of the other altcoins in the short term, but in the long term, I think BTC is your best bet if you're looking at it from a very long-term perspective. Altcoins come and go, a lot of them. BTC has stayed around for a very long time. Doesn't mean that it can't change in the future, but the network effect definitely has a pivotal role in cryptocurrencies. So now going on to the market cap, not a whole lot more to talk about. Let's look at a smaller time frame. In my opinion, we will see a little bit more of a consolidation. So I think this is going to edge up a little bit higher. We could see something like this, where you see a nice ascending zone formation like there, and then you see the next dump down. It's just too early to tell right now because this was the move to be in. If you weren't in in like late 2020, November, October, all the because this is that BTC dominance increase that we initially talked about, where I think in the next run, Bitcoin's going to take a lot of the dominance back after the consolidation. So when Bitcoin has completed its consolidation and it's winding up very shortly for the next move up, and then BTC starts to break out, I think alts will lag behind, creating more market share for BTC when altcoins are still moving to the downside. So BTC is going to aggressively take back that market dominance. And then when there is more hype, awareness, optimism, positive news, positive feelings in the cryptocurrency market, I think that altcoin season round 2 is going to be coming back even stronger. It's going to be like on steroids. And that's the time to be not worried, but when it's absolute euphoria and mania, I think it's still a little bit time before that actually comes into set, because late 2017 was an absolute wild time, let's just say, and I think there's still a little bit of time before we're going to be seeing that within this current bull run. So looking at a different chart here, not a whole lot more to talk about. I think there's going to be a little bit more consolidation coming in to that. And then on the BLX chart, this is that head and shoulders that we talked about in the smaller time frame, but on a larger weekly time frame. This is that triangle that we just initially talked about, the largest triangle that we've seen for BTC since its inception. This is the first major pullback from that triangle. Totally understandable that it's going to be a pretty significant one, because we've seen nothing but up since October of around, let's say, 480+%. You know, 50% pullback is pretty acceptable. If you can't handle that and you've been making gains since that point, you got to understand risk reward, because that's still pretty unbelievable risk rewards, I would say. So now moving on to a different chart. Let's close this up on our small time frame BTC. Actually, let's go to a smaller time frame. I don't think we've discussed this. So looking at the daily here, let's get our snip. So this was the potential wedge that we were looking at if this were to hold, but it did not. And then we got our major move to the dump to the downside from this point. So initially we were thinking, okay, well, we don't know where it's going to hold, so we're just going to be staying patient. We know it's a bull run, and we see lots of wicks to the downside. We'll talk about this structure on a smaller time frame, but this resistance is pretty well respected. So I'm going to potentially look at this being a third, because if we get our third touch here, that would be a well-respected resistance, and I would use it for this structure, and I'd be using this as my ascending level of support, creating my great wedge. And this is, instead of it being a level of support, it is now my potential midline if this actually comes into fruition, because that's going to be a slight increase in terms of angle. So this is at a steeper angle than this, so the midline is not going to be absolutely perfect. It's going to be slightly angled because the descending resistance is at a greater angle than the ascending support. So when we're looking at that, that could be a very logical case for the midpoint, and then you're going to be looking at a very well-respected zone. You're going to get that third touch, and once it starts to rip, you're going to be looking at some great opportunities in some alts and in BTC for some leveraged trades. So let's move into the dump. Very well-respected move to the downside, actually. When we take a look at the smaller chart, it's not like a massive puke. Like there, yeah, it was a massive puke. Let's talk about it looking at a snip here. So you see, well-structured, well-respected move to the downside, right? Where you get a series of lower lows and lower highs that can be connected with a series of trend lines that create a descending wedge. Great looking move to the downside. It's not like it's a dump and then just an absolute capitulation, like we saw, for example, on oil, where it actually went negative. Very well respected move to the downside. What you're seeing right now is actually a potential reversal of a symmetrical triangle, where you see a low right here at 30K. That was like the final capitulation mode. You see a higher low form right here, and you see an even higher low form right here. So that is your first reason, is a symmetrical triangle. Let's just shorten it right there. The second reason, actually, we should name the first one, is a well-respected descent. So a descending channel for the well-respected descent. The second one is going to be a series of higher lows and lower highs, creating a symmetrical triangle formation. And then this one has a nice midpoint because they're very equal in terms of the angle. So that's your second potential validation. So you have your symmetrical triangle right here. And then your third is actually going to be, if you're looking at it from a larger time frame and looking at the candle closures, not the wicks, you see a great opportunity for head and shoulders right here. Right, where you see the left shoulder, the head, and the right shoulder. You do have an angled neckline, but that's going to be your head and shoulders. So that's the head. Oh, that's not the end. Head and shoulders formation. And then you're going to get that push here. And if you get a little bit of a move to the upside, that's going to be your bottom, right? And then if you're looking at it from a larger time frame, that's your number one. That's a very shitty one. And then the bottom right here is currently what we're looking at. We're zoomed in right here. So we're looking at a potential bottom here. You're going to get a slight move up. I don't think this is going to be the bottom to be looking at for a potential leveraged opportunity because you're going to be waiting a while before the expansionary phase. So might as well just wait until that point. And that's currently what I'm looking at for BTC on a small time frame. And from a technical standpoint, that's why we're looking at that in terms of a potential reversal. And this is also a capitulation point from a relative volume standpoint. If you're looking at the volume for Bitcoin, you see at massive capitulation points, you do see bottoming formations because it's a capitulation. Like in 2020, let's turn it into like maybe like a 2-day, maybe a little bit larger. When you get extreme relative volume, look what happens after, right? You get massive extreme volume. Look what happens after. You get massive extreme volume. Nice little move to the downside. Massive extreme volume and massive extreme volume. This one was in the middle of a bear market. This was in mid-range. You have to understand the market cycles. But this is a capitulation phase where, in my opinion, we're going to get a potential bottoming, a symmetrical triangle, and a continuation to the upside. So now let's look at some alts here. This is BTC. Let's now look at Ethereum. Let's zoom that in. And you see this nice on the 2-day, very well-respected ascending support that is held very well. You see a potential reversal looking at a smaller time frame. Not going to go as much into detail here just because BTC is the main one that I think will be bottoming first. And then once we see BTC really take charge, then we'll look closer into the alts to see what we're able to identify. So you see these nice descending zones that have broken. We can actually take a quick look at oil if you like, but oil had these ascending zones that just held and held and held and just dumped and then held and held and held and then dumped. That's not great seeing them. This is the complete opposite, and this is great for the case of the bulls, where you see these resistances that get broken out, and then you get a little resistance that get broken out, and then you're getting a little retest here. And then in my opinion, this is setting up to be a head and shoulders as well. If this is able to hold, where there's a lot of confluence, you get the descending zone, the ascending zone, and the horizontal zone of support. So there's a lot of potential for this to be a head and shoulders. Now, like I said, I think because Bitcoin has a little bit of a while to go, this could be a larger setup like so. We don't exactly know. It could even be like a descending zone like this, where you're getting a midpoint right here. We don't exactly know how the formation is going to be coming into fruition just yet, but I think BTC is the one to look at right now, and then once it sets up and is looking a lot more primed for potential move, I think altcoins will be looking a lot better. But right now we are holding at a very nice state at around 2,300, let's say 2K to 2,300 for the level of support. I think there's some patience that needs to be taking place before we get our next long push, like we saw back in kind of November, December of 2020. Very, very strong level of support at around the $300 range that we were looking at, and it formed a beautiful formation right there. So patience is needed. I think there's a little bit of time before our next push, but it does look well, holding above the 20 or 2K to around $2,200-$2,300 level for Ethereum. Also going to be looking at PancakeSwap because I do think that this is a really good opportunity. Also potential formation of a reverse head and shoulders. It also does have that descending zone right there, so you're forming a slight descending triangle as well as a reverse head and shoulders, which is a great opportunity as long as the $15 level holds. If the $15 level does not hold, would not be great, but you do see inevitably you're going to get this break in this series of lower highs, although it's not absolutely beautiful. You could draw a couple descending zones, but this angle right here, we were getting this huge move to the downside. This is what I mean in that it's not absolutely well respected in terms of the move to the downside for Cake compared to BTC, where it's very, very well structured. So where you get a massive, just absolute dump. You don't want to see that, and we saw that in Cake. So I'm going to have quite a bit of patience, but you see these series of lower lows and lower highs that kind of form like a nice potential trend line, maybe somewhere later down here. We're going to get held up, maybe by like a fake out of a reverse head and shoulders, coming back down. I'm going to be really patient. Like I said before, I think BTC is going to take the charge before altcoins will, but Cake is something that I am looking at pretty regularly for opportunities, because I think that later on when altcoins do take charge again, a lot of people are going to be choosing Binance over Ethereum because of the extremely high fees, because people are paying $200, $300, $500 for fees just to trade on the Ethereum network. That means every single token that you're trading on Uniswap with the ERC network backing it has those fees. So if you're willing to pay that versus paying pennies, why not just pay pennies? That to me is just a no-brainer. So hopefully that is going to be an opportunity worth investing in. So that's going to be the video. Hopefully you enjoyed it. If you thought this was useful, educational, if you got something out of it, it would be greatly appreciated if we are able to get a like and subscribe so we know to continue to make these videos. I definitely enjoy making them. Keeps me in the loop with what's everything that's happening in terms of a little bit more of the broader markets, because I do tend to mainly just focus on crypto right now because it's just such a lucrative market to be in. So if you think we should look at something else, feel free to leave a comment. We do check them. And until next time, have a good one, traders.